Hey folks, welcome back to Mindful Finance, where we simplify finance for everyone. Today we are diving into a fascinating topic, understanding the intrinsic value of a company through Benjamin Graham's formula. So grab a cup of tea and let's break it down together. And this is Sundar and you are watching Mindful Finance. Imagine you're shopping for a new gadget. You look at the price, but you also consider what it's worth to you, right? So, like if you're taking an Android mobile, you check RAM, graphics, memory, pixels, whatever it is, right? And you will try to compare. Okay, this price is matching with this mobile or not. All those comparisons you will make, and you will try to find out whether the price you are paying for that particular mobile is worth or not. End of the day, the worth is what we need to find out, right? Similarly, in the stock market also, there are different ways to calculate the worth of the stock of the company. So one of the method is Graham's formula. So that is what we are going to learn today, and understand that this is just a formula just to start your basics. Okay, don't just blindly follow this formula alone. This formula is the last step of all your fundamental analysis, starting from understanding your PE, starting from your understanding of company management, after finding out whether the company is easily understandable for you or not, and the company's moat, which is like how their competitors are doing. Are they monopoly? Are they cyclic in nature? Are their revenues coming from US or other countries? Right. So think about all those things, and finally to make sure whether it's right time to buy the stock, or the value which you are going to pay or planning to pay is right for the stock is not. That is what the end of the day you are going to learn from this video. So just understand this video is just for a training purpose, and just don't blindly only follow this one. Okay, and coming videos I'll try to teach you a couple of other formulas also, so that you can compare different formulas before you make your decision. Let's jump into that. Okay, let's get into the details about Graham's formula. If you see, so I'm using a Google sheet. You can use whichever. You can use Excel also, since if you want a live data and if the file to be shared, so I thought of like using Google sheet for your convenience. Okay, so this is the formula. The intrinsic value is equal to EPS multiplied by 7 plus 1G and again multiplied by 4. This is the generic formula which was given by Graham. Okay, now we'll dive deep into this each and every detail, and sometimes these values are not the same. Okay, that is what we are going to do. See, stock, for example, I want to check Karnataka Bank. Using a Google formula is just equal to and Google Finance. It will ask ticker name. So this is the ticker name, and I want the EPS. Okay, comma. What is the attribute? This is my. Okay, I close. So I get. So this is the. I'll make it this Indian rupee. So this is the EPS. Then what is company with zero growth? Which means what we are going to assume is this. If this company is going to grow for next 5 years, like with a zero PE, like there is no growth at all, right? So in a generic, it is 7. Okay. 8 is also fine, but 7 let's use it. Growth rate, I'll come to that. For now, like in a generic view, I'll put a growth rate of 10. Okay, 1G is like 1 times of growth, which is 1. AAA car bond average yield. You can Google it. For example, say AAA bond yield in India. You Google it, you will find a site called investing.com India 10-year bond yield historical data. Click this one, you will see a chart. You can see a chart. Okay, and here you can go to monthly view. If you see this chart, okay, this is from almost from 1999. Okay, if you see initially the yield was 12.7. okay, then it fell, and currently if you see it is around 7.06. so this is the current bond yield. Okay, in an average you can see the lowest, or this one is something around 6.2. 0.2 is our average. So go here, our average bond yield can be 0.2, and the current one is say 7.03. So now we need to find the intrinsic value of Karnataka Bank. So now the formula is here. We are going to use this formula. Okay, equal to, put a bracket, PS. What is EPS? 4328. Multiply by, again open bracket, 7. 7 is our company growth. Okay, this one. Then plus 1G. This close bracket. Again multiply by 4 4.4 is the bond yield. What is our bond yield? Bond yield 7.03. 6.02 is our bond yield, close bracket, and divided by y, which is 7.03. And this formula here, divided by y. Okay, this is the formula. If you see, the intrinsic value of Karnataka Bank is 305 rupees. And what is the current price? You can use the same formula, Google Finance, ticker name, close bracket, you will get the current price 224. So now intrinsic price is 305, the current price is 224. That means it's already, it's a good to buy, right? But not immediately, don't do that. Find a given margin of safety. Say I'm going to give a margin of safety as 10% here, okay? And my buying price will be equal to 1 minus 10% and the multiplied by my intrinsic. Okay, so this is the price. I'm saying Karnataka Bank stock comes 274, I'm okay to buy. It's like average. This is the price we can buy. Below is obviously it means undervalued stock. So now current value is 224 and I'm okay to buy at 270. So now I'm giving a if condition just to, I'll share this Excel sheet, this sheet, so that you can also explore. So don't worry if you're not able to understand. Okay, the logical expression I'm going to say is, if my price is lesser than intrinsic price, comma, I'm going to say buy, else I'm going to sell. That's it, done. So now this says signal is buy. That's it, simple, guys. You understood, right? So as per the current scenario, see, this is something analysis you have to do. As I mentioned, after doing all the fundamental analysis, you have to come here, not just take this and jump into buying any kind of, do a thorough analysis and then come to this. So similarly, I have made this formula and it is placed here. I'll share this file so that you can explore it by yourself. So here what I have done is I tried with different companies. If you see HDFC Bank, if I see my signal is sell. Obviously HDFC Bank fundamentally good, but is it right price to buy? Per here it says 1170 is a good price to buy. If this comes to this price, obviously I will enter into there. I'll buy. Right now I just watch the market. So current price is 1447. As I mentioned, one thing is you have to constantly invest in that particular company, or just you need to find out using the chart pattern. Whenever it went down by, say, 5% or 10%, you can invest. And this main thing is, when you are entering into a stock, make sure you are entering at the right time. So for that you are using this formula. And also this is the one will guide you to buy a multi-bagger. So everybody says like when how to find a multi-bagger, right? So now if you see Natco Pharma, right, I'm okay to buy at 1475. Current price is 900. Obviously I have discussed about Natco Pharma earlier also. It's a good company and you can buy, and currently it is at 952. And what it says, signal is buy here. Similarly, let's say Manappuram Finance, till 502 rupees I can buy this. Okay, one more thing, I forgot to miss that. I'll just see this growth rate I have given 10, right? What you have to do is go to Yahoo Finance. Go to Yahoo Finance, search for Karnataka Bank. Maximum try to pick the BSE one. Okay, sometimes NSE may not have this detail, but you can try both. See, it is not available. So now let's see again Karnataka Bank. I'm going to pick NSE now and click on analysis. Here, if we come down, we will see growth estimate. 5-year growth estimate says 22.8. So we can go back here, and the growth rate, instead of 22, let's say 20% from our. Now if you see the price, the intrinsic value become 305. Earlier when it was 10, nothing wrong here. I didn't multiply it by G. Sorry guys. PS divided by plus again 1 into growth again bracket 2 average yield divided by, sorry for the mistake. So this is what the average growth, right? It's 22.8. So you have to apply, instead of 10 you can say 20% growth rate. So Karnataka Bank, it says 1000 rupees is intrinsic value and the price I'm okay to buy is 927. And just imagine the current, right? Even instead of 22, if I consider the margin of safety also, if I say 30%, 721 is the price I'm okay to buy, right? So just use this formula. I'll share this file to you and you can explore this, and here you can always apply the ticker name. Sometimes see, if I'll show you one more issue with Google Sheet. I cannot find Infi like this. If I put Infi, it will give you a US stock. So what you need to do is go to Google Finance, say Infi stock ticker. If you Google it, you'll get the the ticker name. So copy this from here, NSE:Infi, right? Copy the entire thing and come here, paste it here. But here after colon, there's a space you have to remove. If you remove that, right? You will get the Infi India stock. So Infi India stock also you can see like. So hope you understood. Now hope you understood how to calculate the intrinsic value. And we are a value investor. We are a contrarian investor. We are a mindful investors. So don't forget that. So keep on telling all these three things. We are a value investor. We are a contrarian investor. We are mindful investors, and we won't invest unless and until we have a proper conviction. So that is our philosophy. Hope you like this video. If you like this video, please press the like button. Share it with your friends and colleagues, and subscribe the channel. I see a lot of people are viewing but they are not subscribing, and don't forget to press the notification icon. Thank you so much.